Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, July 2nd. Quick administrative note, this is a shortened week. I'm sure everybody knows that. We have July 4th that falls in the middle of the week on Wednesday. Therefore, we have a half a day tomorrow, Tuesday, full day today, and a full day Thursday and Friday, which is going to kind of interrupt what's been going on in the charts over here. Friday, we had a big move up, as you can see here on a 10-minute chart. And I always like to show you where we were last week. We rallied on low volume, virtually no volume at all, and we ended up closing on its highs. Futures are now up about 4 handles in the early morning session. And interesting to note to see where we go from here. And this week's going to be sort of important, but I think any move you get, it's going to be to the extreme. So if we do get a little sell-off, it might be hampered with the low volume and a lot of the big market participants away this week. A lot of people do take this week off since it does fall on a Wednesday, half a day on Tuesday, and then they just said let's take Thursday and Friday off. So it's going to be it's going to be a good and interesting week regardless. I'd like to see what happens today. It's going to be important. We did have a big gap up on Monday, and we rallied into the close. And I always like to see if we're going to have, if it's just a one-day wonder and all of a sudden we give back most of its gains and then actually just fill this gap area here. So this is going to be really interesting. More than likely when you do have a big move up or move down, they usually back test, kind of fill that candle, 50% of that move, and then they resume the uptrend. Charts aren't looking too bad. Again, I keep mentioning, look, if you're short and, the bias was to the downside, and you see volume coming in here. It's crazy to be holding anything right now. At least we need to get this market in uncertainty out of the way, and then really see where the markets go from here. Now the markets have been kind of digesting some pretty decent news, bad news actually, and we were doing okay with the market. So the markets are saying, hey, you know what, we'll just shrug this off. This is going to happen. We know this is where we are. And it's actually a good sign for the bulls anyway to be up to the upside, to be up this much at this time with all this uncertainty coming out of Europe. So pretty good. We actually had a reversal in the key sectors that we look at, which would be the Russell and the transportation sector, which we'll get into in the charts. It's a really, really good sign. What I'm going to be looking at now going forward, I would like to see this market pull back a little bit on low volume, lower than usual volume actually, and hold key pivot points and then move higher. Then I'd say you have a little rally that we could test the highs here. Now we do have seasonality strength coming into this month. Usually the first 2-3 weeks are pretty good, and then we start getting some profit taking going into the end of the summer. Where we kind of follow through, and then we have that year-end rally. So just keep that in mind. The next couple of weeks should be a little bit positive, slightly to the upside, without pullbacks and of course, little rallies. Nothing substantial. But obviously, news will trump the charts. They have been, and they continue to do so. That's why I say, reducing your exposure and really not carrying any positions because you don't know what's going to happen. If you just look at this chart, this 10-minute chart, how crazy. We gapped down on Monday. Nobody wanted to buy stocks. Hit a new low. Retested the low on Tuesday. Drift higher. Gap back. Gap lower. We're actually in this range here on Thursday. And they rallied them hard Thursday night into Friday for the number. It's just totally insane. There's no rhyme or reason. And a lot of this has to do with the algorithms and high-frequency trading. A lot of these are computer-generated, and they just rally them right into the close. And it's something that I've really never seen. Usually when they rally this high, they usually would come in and sell off into the 415 market pit close in the minis. And that's not the case anymore. They just rally them right into the close like this one here, like this day here. So anyway, just wanted to bring that up and to make it a key point. Just make sure that when you are trading, just be real cautious here because anything could happen. They could love them, and then the next day nobody wants to buy stocks. So just keep that in mind. Okay, let's get into our indicators. Well, first let me just show you what's going on here with the dollar. We did have our successful bull flag pattern that kind of broke out, and we're literally was like 20, 30 cents from the high here, and we sold off pretty hard here. So this large engulfing candle usually will retrace back up in this area, maybe to that to the 8-day moving average, which is a little momentum index. Excuse me, a momentum moving average. And if we can get into this area here and then sell off again, then I'd say, hey, okay, and we could take out this pivotal low, maybe 81.20, somewhere around there. Then I can say the market can really move to the upside. But right now, it's just a one-hit wonder. We just sold off hard here. This is a bearish candle. You can see the S&P curl up here. So no question about it. This is not a good sign if you're a dollar bull. Okay, now what happens to this? Well, we had a big day in energy. I mentioned energy stocks on Monday, if you remember. Look at some of the smaller stocks. Coal sector took a big move higher, and I'll show you those charts a little bit into the session here. But so keep an eye on this dollar. Very important. When you have dollar weakness, you're going to have commodities, hard commodities, soft commodities, and equities move higher, and that's what happened on Friday. All right, now, always good news comes a little bit of bad news. We do have overbought conditions again, and it's so funny how we have them quickly. It usually takes 2, 3, 4, 5 days to get overbought, oversold. Not in this environment anymore. 2 days, you're overbought. And look at where we are now. We're at these big levels. Remember, we had this big drop here, okay? So if you're trading intraday, and I'm talking short term, 1 to 2 days, 1 to 3 days, be cautious of a pullback. It's inevitable. We will be getting one soon, and I will show you from our trusty bar chart, momentum indicator. Look at where we are. I mean, we went from oversold to overbought in 1 day. This is way overbought, guys. Now, overbought is not a sell signal. It can last for another day or so, so use caution here. If you're legging into a short for a swing, make sure you position size yourself for that short. So if you are short, you want to leg into a short and then add to it. You don't want to be caught all in on one shot here. So overbought conditions. Let's take a look at the bullish percent, 50-day, above the 50-day moving average. Again, look at this again, guys. We are at these levels already. So we are overbought. So I want to make note of that. Be cautious. Bullish percent. And not too bad, curling up here. I'd like to see this thing move higher and take out. Then we can get really some momentum to the upside. But our main picture here is something that I want you to take a look at. Now, this is just a quick look at the S&P on the stock charts, which I like to look at sometimes here, and just gives you a little different view. Look at where we are here. We're back at these areas. Now, if we can come back in a little bit here, and then I always like to say maybe make a higher low from this corner and then break out of this area resistance, then we got a shot to test the highs. And can that happen in the next few weeks? Absolutely. Absolutely. Okay, so let's take a look at some of these charts. Spider Daily chart. Higher volume than Thursday. Good sign. Absolutely. We always want to see that. And what do we have here? We actually reduced our exposure as far as overbought conditions. And look at what happened. We sold off, making a higher low from this lower stochastics here. MACDs are still pointing up. As you can see, we remember I mentioned last week that want to see these things stay and hook up. So this is all very positive here. Now, if we could get back to this 50 and then rally higher, I think you got a case that you can literally at least get into this 138, 139 area in the S&P. But market strong market. And why? Well, we have a nice inverted head and shoulders pattern on a 60-minute spiders, and that validated. We jump back up again. Okay, so we're looking at a decent move higher. A break above Friday's high will definitely create more order flow to the buy side, and I think you have something, again, looking to test the highs. Now, keep in mind, remember I mentioned that we have a lot of larger time frames have a lot of bearish patterns. They are not confirmed, meaning they have not triggered. So that's the key here. Now, we have bearish patterns that have not triggered in a longer-term time frame, which take precedence over the shorter-term time frames. They may not trigger, and the market can continue to go higher. So let's just keep that in mind. Know that we do have some red flags, but we want to make sure we want to trade the trend, what we see. So trending right now is higher, and we're going to look to buy dips and look to buy the market itself. Transportation sector, key leader of these indices that we follow. Not even overboard. Look at this. We're hooking back up again. So this here looking good. Now the volume was a little bit lighter than Thursday, but I take that. So now we're back above this little area, back above the 50, back above the 20, back above 200 within 2 days. Incredible. But nonetheless, big sign. Next day or so is going to be interesting. We might have to wait through, believe it or not, all of next week. Market might just chop around here within this large candle this whole week because I don't see this week seeing anything of significance at all. If anything, now's the time to take off, get away from the computers, and enjoy with family and friends this week because it will be dead. And actually, not looking, you don't want to be looking to get in trouble on a lackluster day where you can't make your money back. IWM's really nice. This is what I like to see here. Higher low off a low stochastics, MACD pointing higher, volume higher. So when people say, oh, there's no volume in the market, there isn't. But if you look at our pattern in the next few months, you could still see the pattern, higher highs, higher lows in volume. And this is indicating to me that that was a clear buy day on Friday. So people moving into stocks. And what do they want to do? Risk on. They go right into the IWMs, which is the benchmark for the Russell 2000. So that's a key barometer here, okay, guys? All right, take a look at the other ones. Qs. Hey, banks, technology, those are the two areas that need to move when the markets move. So you see some health into the sectors. And this one here clearly got above our little area, and now we're above the 50-day moving average. Okay, still again not even close to being overbought. And our indicators here, our market internal indicators are overbought. So the Qs, another good sign that we have a chance to move higher. Now, I wouldn't surprise me if we pull back today, tomorrow, and we may not. We could just consolidate within a range here. So something just to take note of, okay? Dow Jones, Industrial's looking okay. Same thing, same type of chart here. Nice big gap up, and really held that gap all day. And that's really about it, guys, all right? So be on your toes the next couple of days. I won't really be pushing size here, and then let's see where we go. But we'll give you a quick update tomorrow before the holiday. Have a great day, everybody.